Have you ever wondered why the value of the Iraqi dinar seems to be on a roller coaster, especially when compared to the US dollar? The answer lies deep within the policies of the Central Bank of Iraq, or CBI. In 2025, Iraq is at a critical juncture, trying to stabilize its currency, the dinar, while also playing by international banking rules. Let's break down what's really happening. First, you have to understand just how crucial the US dollar is to Iraq's economy. Iraq sells its oil for dollars, making it the lifeblood of the entire financial system. The CBI uses these dollars to pay for everything the country imports, to build up its foreign currency reserves, and most importantly, to try and keep the dinar's value stable. But this heavy reliance on the dollar is a double-edged sword. When the supply of dollars gets tight, the dinar takes a hit, especially on the black market. So, what exactly is the CBI's dollar control policy? Think of it as a set of strict rules designed to monitor every single dollar moving through Iraq's financial system. The main goals are to stop illegal activities like money laundering, comply with U.S. Federal Reserve regulations, and to make sure dollars are only used for legitimate trade. To do this, banks and the currency exchange offices now have to provide detailed paperwork for every dollar transaction. They need to know who is buying the dollars and why. This is all part of a bigger plan to make Iraq's banking sector more transparent and trustworthy on the global stage. But why did the CBI suddenly get so strict? The crackdown really started in late 2022. International regulators, especially in the US, became concerned that huge amounts of dollars were being smuggled out of Iraq or funneled into neighboring countries through fake import schemes. In response, the CBI had to act. They introduced a digital platform to track transfers and put limits on how much cash people could withdraw. While these moves were necessary to improve oversight, they also created a bottleneck, slowing down the flow of dollars into the local market. And when something is in short supply, its price goes up. This is exactly what happened to the dollar on the parallel market. Now, let's talk about the impact this has had on the dinar itself. Officially, the exchange rate has been kept pretty stable by the CBI, hovering around 1,32 dinars for one US dollar. But that's just the official story. On the streets, in the parallel or black market, the reality is very different. Because dollars are so hard to get through official channels, the price has shot up, often exceeding 1,5 dinars per dollar. This gap between the official rate and the market rate is where the problem really hits home for everyday Iraqis. When importers can't get dollars at the official price, they have no more choice but to buy them on the more expensive parallel market. They then pass that extra cost onto consumers. That's why the prices of everything from food and medicine to electronics and cars have been climbing. For the average Iraqi family, this means their dinar just doesn't stretch as far as it used to. Their purchasing power is shrinking, and the cost of living is rising. This policy has also been a game changer for businesses and the banks. Banks now have to navigate complex compliance systems, which can be costly and slow things down. Some smaller banks are struggling to keep up. On the other hand, the bigger, more compliant banks are gaining more trust and legitimacy. For businesses, especially small and medium-sized importers, getting their hands on dollars has become a major headache. Many are facing delays or being forced to raise their prices to stay afloat, while larger, more connected corporations often have an easier time, creating an uneven playing field. So, what does the rest of the world think about all this? The reaction has been mixed. The United States and the International Monetary Fund have praised Iraq for taking serious steps to clean up its financial system and fight corruption. They see it as a move toward modernization. However, many traders and the business owners inside Iraq argue that the regulations are too restrictive and they are strangling the private sector. The good news is that neighboring countries have seen a drop in illegal dollar flows from Iraq, which suggests the policy is working to some extent. Iraq is truly walking a tightrope, trying to please its international partners without crippling its own economy. Looking ahead to the rest of 2025, the CBI isn't standing still. They're planning to keep refining these policies. One major push is to encourage digital payments, to move the economy away from its heavy reliance on cash. There's even talk of a digital dinar, which would be a huge step forward. The CBI is also focused on growing its foreign reserves to better defend the currency's value and is in constant negotiation with the U.S. to make dollar transfers smoother. If they can pull this off, they might finally close that gap between the official and the parallel market rates, and in doing so, build real confidence in the dinar. But the road ahead is still full of challenges. The black market isn't going away anytime soon, as long as demand for dollars remains high. Corruption is still a major hurdle, and the country's dependence on fluctuating oil prices means its dollar income is never guaranteed. Public frustration is also growing as people see prices rise while their incomes stay the same. The CBI has the difficult task of balancing tight control with economic freedom. In conclusion, the CBI's dollar control policy is abroad and the necessary attempt to bring stability and credibility to Iraq's economy. It's about fighting corruption and getting in line with global standards. But this long-term vision comes with short-term pain, like dollar shortages and the inflation. The ultimate test for Iraq will be to manage this transition successfully, strengthen its institutions, and diversify its economy away from oil. If it can achieve that, the Iraqi dinar has a real chance of regaining its strength and earning the trust of its people. Thank you so much for watching. If you found this explanation helpful, please give this video a thumbs up. And don't forget to subscribe and hit that notification bell so you don't miss our next deep dive. See you in the next video.